Hi there, and good morning. This is Dr. Bob Flower and the Master Pattern Report for Monday, January 18th. Well, okay, let's, like we usually do, let's see what last week presented us. On the 15th, we saw silver make a move from 1840 prior day down to 1801 on the 15th. So from the 14th to the 15th, there was a nice move there, about almost 2.5%. Oil hit exactly on the 13th. We went short on the 13th from $79.93 to $77, and we were then stopped out for now anyway. So we made a nice trade there. The S&P went from 131 low to 1148 high on the 15th, and moved up as we called it last week. We see another oil now for this coming period. We see another oil move on the 25th, a dollar move on the 25th as well, and we think the dollar may be down and oil may make a reversal there. So let's see what happens. We'll have a better idea next Monday. There's a silver move coming on the 21st. Next week, and interest rates on the 22nd. We think that the rates may reverse on that particular day. By the way, looking at the interest rate chart, we see a particular move, and I'm going to show you that right here. Here's the interest rate chart, okay, and you can see this. You see where it says that little red arrow? That's an indicator of a bottom. And it did bounce off of there, but now look what happened. See that little green speck there, how it made such a dramatic drop down? Okay, well, usually that's a very bad sign. What it means is that the true market forces are starting to overcome the manipulated or the false markets. So this to me is a sign to watch out over the next 2 weeks, definitely. We think that there's going to be something dramatic occurring. Okay, so now our short-term portfolio is now up 40% from January 2nd. We're hitting on all cylinders here, and the only market that we're having some problems with, and we're staying clear of right now, is the interest rate markets. Okay. Some more information on real estate. It seems to be bottoming in a great number of areas, but folks, we don't think that's going to hold up. We believe that we'll see another hit by late spring, early summer. And in fact, this means more deflation. I don't see how we're going to experience inflation in this country until the real estate and credit markets make a comeback. People don't have the equity nor the earning power to support an inflationary environment. I mean, without a complete breakdown. Which we think is coming, but not in that way. By the way, here's some updates that we have on the two stocks that we had mentioned to you: the China real estate and the India real estate, PIN and EJ. Okay, PIN is up 10% from our entry point. Up around 23 and a quarter, somewhere around there. While EJ is down about 15%. It went from 21 to a little over 18. China's having a little difficulty right now with its market, and while we expect a Chinese bubble, we don't know if it's just yet. Right? But the way these interest rate markets are playing, and these other markets with the vast manipulation, it wouldn't surprise me. Okay. But anyway, hang in there on those two, and try and put maybe a stop on that EJ if it gets, depending on your own preference, you know. Another interest that we had mentioned before is the Australian dollar is gaining strength, and there is a good chance that it will hit parity with the U.S. dollar by this spring. Right now, it's about 92 cents versus the U.S. dollar. So that's a good size up move for a short period of time, 3, 4, 5, 6 months. So. And by the way, their bonds, as we had talked about, are paying over 5%. So it's a good play. The Aussie dollar, we like it a lot, and we're in it. Same thing with the Canadian dollar, but their rates are not as high. Canadian dollar is about the same, about $92 around there. But they're both good plays. And we would suggest that you do this with foreign accounts. You get find a bank. I think the Aussie is West Bank, Westcroft Bank that you can buy this stuff through. But open up an account there in Australian dollars rather than go out and play the Forex. I wouldn't suggest the Forex unless you're a Forex player. Okay, this way it's safe. Your money is there. You're not worrying about violent swings, getting your account wiped out with the leverage Forex. But that's up to you. I think you can make yourself a nice safe return on that. All right, and we as you know, we don't like what's going on. We're seeing more and more rebellion. People are beginning to understand that, for instance, that this T movement, that T stands for taxed enough already, and it's not just an acronym for a movement of hotheads. People are playing fed up and fighting back, and I think we've already started to see this politically. The problem that we have is the system is still broken. It's still corrupt, and we need to put pressure on these people. We do need some sort of change. We need some sort of intermediary between those 2 and 4 year election cycles where the public can have a definite say and an impact on Congress. Bring them back down to earth where they belong. Okay, so keep an eye on that, and keep in touch with your politicos. I'm beginning to get more and more responses on a regular basis from these people. So it seems to indicate that that's where we're at, and they're starting to respond to this in a more favorable way. The more we hit them, the more we throw them out. I think the better off we're going to be. Maybe not them, but we're going to be. And for those of you who refuse to see or accept what is coming, or at least where we're heading, here's a favorite quote of mine. When you stick your head in the sand, you only expose your vitals. So, word to the wise. Have a great week, and we'll see you next week.